Hello, everyone, and welcome to the show. I'm very excited to be joined today by Ben Gordon, who is the managing partner of Cambridge Capital. Ben has successfully built multiple companies, has a very impressive portfolio of companies at Cambridge Capital, and he also serves on the board of multiple companies. How are you doing today, Ben?
Great, Andy. How you doing?
I'm doing really well, thank you. I was really looking forward to having you on the show to share some acquisition news that you're going to talk about and tips for success in this venture capital world with our audience. So just to kick things off, I want to thank our sponsor, Zero Down Supply Chain Solutions. If you're looking to reduce your freight spend on LTL parcel and mail and get better visibility and control, please be sure to click the link below in the description. So to begin our discussion, Ben, you and I had the opportunity to talk offline, and I learned about some acquisition news you're able to share with the audience. Can you tell us about that?
Sure, Andy. Happy to do that. Well, as you know, Cambridge Capital is a private equity firm that invests in logistics and supply chain technology. And we just announced on Friday our 9th deal. And that's a company called BOA Logistics. They are a market leader in the cold chain. So what they do is they focus on consolidating LTL shipments from food brands, which they then will bring into whether it's retailers, restaurants, warehouses, DCs, but really it's kind of the whole supply chain for food in the cold chain arena. It's a terrific business. We're really excited. It matches many of the things that we prioritize. Number one, it's a category that's got great tailwinds because you got to eat. Whether we're in a recession or not, food demand is still there. Number two, there's a niche associated with that. Not everybody can handle cold chain, so there's some specialization. Number three, it's a great team, founders that came together a little over a decade ago and have built a fantastic business. And number four, it's an area where we can help them because they've got something great. We can help augment that by bringing some of our relationships and people and connectivity on the technology side in order to continue to automate and improve. So it's a great business, and we're excited about the deal and partnership with the management team.
Awesome. Well, congratulations on that. I've worked in the trucking industry for 25 years and have had the opportunity to work with many food transportation companies, and it's been awesome meeting amazing people and working with them. So that's really, really awesome to hear. I also know that you and I both share a passion for philanthropic work. And I believe it is very important for companies to have a why behind why are we doing all of this? What's the why? And so just to drive everybody forward in accomplishing more and doing more and supporting those in need. So can you tell us about some of your philanthropic work?
Sure. So like you, Andy, philanthropic work it's important to me. It's an important part of my values. My view is you work hard to succeed in business, but use your time, use your money, use your resources to help and help those that are in greater need. And like you, I'm a logistics guy. One of the natural places of opportunities to use our logistics and supply chain capabilities for humanitarian purposes. Last year, we bought a majority stake in a company called Everest, a terrific company in truck brokerage that employed 150 people in Kyiv, in Ukraine. And I was there last September, had a fantastic time with the team, the people, the country. It's a wonderful place. And of course, when Russia invaded on February 24th, we had a huge problem, which was how do we make sure that these people are safe? So my first move was to work with a team at Everest and help evacuate everybody that wanted to be evacuated, because some of them wanted to stay put. And so we got people to Poland, Czechoslovakia, Hungary, Romania, and elsewhere. And then teamed up with another wonderful nonprofit called Project Dynamo that specialized in evacuating Americans from Afghanistan over a year ago. And so worked with Brad and the team there to help get people out of Ukraine. And we've supported the evacuation of a lot of people. I mean, Everest, close to 100 people that have been able to get to Poland, Czechoslovakia, Hungary, Romania, and elsewhere, but thousands of others since then. Now, and probably most importantly going forward, we started a nonprofit called the Ukraine Logistics Coalition. And the objective was simple: use our supply chain capabilities to bring humanitarian supplies to the region. So we've helped bring in over $20 million worth of medical supplies. And there continues to be a tremendous need for more, whether that's first aid kits, needles, syringes, sutures, bandages, you name it. And so that's been a primary focus for me. It's also been an opportunity to work with other great supply chain companies that are donating resources. So we have supply chain partners that are donating free trucking, typically to get to airports, airlift, particularly for JFK to Warsaw, trucking in Poland, typically to the border of Ukraine, and then the last mile with Ukrainian partners. And so we've really been able to stitch together a supply chain that allows us to go to medical companies and say, look, if you'll donate medical supplies, we can take care of everything else, usually for free. And that allows people to get more bang for the buck and provide more help to people on the ground in need. So that's been a big focal point. And for those in your audience who are listening, if you're interested in helping, you can go to logisticscoalition.org and let us know if you have resources, whether it's medical, food, or other supplies, or if you want to be part of the supply chain network that's donating free truck, air, and warehouse capacity. We, of course, would welcome the help.
That's so awesome. So kudos to you and the partners for stepping in and helping out. My wife and I have been involved in missions work for 16 years, and I've been fortunate to work in 9 countries. I've seen a lot, and there's definitely needs. And as you mentioned, in that region is vast amount of needs. So I would encourage everybody to please check that out. Also, in getting to know you, I learned you have successfully grown multiple companies, have been involved in acquisitions and exits, and you oversee the investments of Cambridge Capital and your portfolio of companies. What would you say are 2 or 3 keys to success in gaining outside capital investments?
Well, if you're an entrepreneur, and I've been an entrepreneur all my life, I've started 5 companies, and you want to navigate the capital markets, I think a couple things to keep in mind. First is, and this might sound counterintuitive, but not always a good idea to raise money. You look at some of the companies in the logistics technology world that have raised, hundreds, or in some cases, of millions or billions of dollars. There's a tremendous amount of pressure on those companies. And once you've raised all that money, you as a founder or as part of the management team, on paper, you might think you're worth X, but really it's not anything until after the business has sold and after return has been generated for investors. So a company that raises $1 billion, a founder might own 30% of that company. That doesn't mean they own 30% of over $1 billion, because if they sell it for $1 billion or less, their equity is actually 0. So in some cases, you're actually better off not raising money, or if you can't bootstrap entirely, relying on friends and family or debt, which, while debt has a price, and there's downside risk, you get to keep the upside. So to me, question number 1 is, do you really need venture capital? And the answer is usually yes, if the following things are true. Number 1, if there's a clear need for significant proceeds, 10 million plus of capital that you think can produce at least 10 times that in terms of value. If you can raise 10 million and create 100 million plus of value, obviously that means there should be a lot of upside for everybody, for you, your investors, your management team, the whole enchilada. So that's 1. 2 is, do you have something that is unique and differentiated? It's hard to raise money for a business, a commodity company, right? A trucking company, not a good fit to raise venture capital, right? There are tech-enabled logistics companies that have succeeded in raising money, and there are some that we've invested in that we're excited about. But most of the time, it's software-based companies because they can grow faster, and because the unit economics or the contribution margin can be so much higher. Let me give you an example. We invested in a company called Greenscreens AI. Greenscreens powers truck brokers. It gives them the tools to be able to make predictive pricing decisions. So you want to ship a truckload of freight from Dallas to New York. What should the price be? Well, You can look at legacy systems, you can look at historical prices. Problem is the market's volatile. Price today could be a lot different from a week ago. And also your data and the nature of your shipments is different from the average in the market. So what Greenscreens does is they take your data, they feed it to their algorithms, and they give you a predictive real-time price. Turns out that that slashes the error rate based on alternative pricing systems in the industry, in some cases by 90%. That means that you're much more accurate, you can make faster decisions, you could be more aggressive in your pricing and still make a margin. And so there are a whole host of benefits that come from that. Guess what? Not only does that mean that Greenscreens is very successful and is growing 5x this year, but the contribution margin on that software is very high. It's over 90%. Why? Well, they spend a lot of money on R&D. They spend a lot of money building something great. But once they built it, the incremental margin on each dollar revenue is very high, much higher than it would be for, say, a services company. So no surprise that they were able to attract capital. You know, we at Cambridge invested, Tiger Global, and various others, refashioned, and so that comes down to, you know, having great unit economics. And the last is you also have to be prepared to adapt, because when you're a founder, and like I said, I've been a founder 5 times. Those of us who are founders tend to be stubborn, right? We think we're right, and of course, if you didn't believe in yourself, you wouldn't start that company. But you have to balance that with being a great listener, knowing that a capital partner isn't just money, but also a partner. And if you don't want that, and you don't believe that's something that's going to be useful, you know, then you shouldn't do that. But on the other hand, if you can, and you do, then you look to your capital partners not just as money, but as people that can help you. And hopefully they're partners that have experience building and investing in businesses that are similar to yours so that they add real value. So I think in summary, not always a good idea to raise money. Make sure it really makes sense. If you do, make sure you've got that kind of differentiation and that kind of returns upside. B, the ability to generate, you know, those kinds of high margins as a result, like the Greenscreens example. And C, be ready and willing to adapt, because life changes when you have an investor.
Absolutely. Awesome advice. So I'm sure our audience is going to really appreciate that. We've got quite a few tech founders and entrepreneurs in our network, and I'm sure they're going to really appreciate that advice. So, you know, what are some of the leading things that you look for in a company and its leaders when you're looking at an investment?
So Andy, here's what I look for. Number one, is this a business that's in a market that has tailwinds? In other words, is the category growing? Because being the best in a category that isn't growing, the markets are more important and more powerful than we realize. So one, is it a large growing market? Things that we've looked for, we've invested in e-commerce fulfillment like Bird, reverse logistics like Reverse Logics, last mile like Bring, AI and sophisticated analytics like Greenscreen. So those are all examples of markets where there are tailwinds. Number two is the business gaining real traction? Well, how do you show that? Do they have blue chip customers that are demanding, such that if you've won that customer, it's easier to win the next 10? Do you have great case studies? Can you prove that what you're doing is replicable? A lot of software companies fall into the trap early on of doing whatever it takes to win a customer, and they end up customizing and having a services intensive approach in order to win that account. But the problem is you then become a prisoner of that. You really want, and easier said than done, to have something that's off the shelf and repeatable, so that if you sell it to one company, you could sell it to 10 others. So is it repeatable? Is it scalable with blue chip customers? Number three, the people. We look for founders that are bright, curious, high energy, willing to acknowledge when they've made mistakes, adaptable, but above all, focused on success. And I think that's important because, look, you know, first of all, we all make mistakes. You know, certainly I've made mistakes. You know, we don't look for people that, it's not a disqualifying factor if somebody isn't perfect, right? I mean, it's not possible. But the question is, do they learn from what didn't work? Can they pivot? And can they adapt? I think that's a super important character, and it's hard to evaluate, right? I mean, how do you really know that until you've been in the trenches with that person? But to me, a good example is, did the business start out in one direction, hit a speed bump, and then lead to a pivot where the second step was more successful, or did a prior business go through that? But I think that kind of adaptability is very important. And then look, the last is there are financial metrics. For us at Cambridge, we invest either in software companies doing typically 5 to 20 million of SaaS revenue, or if they're services companies like Everest or BOA, they're typically in the $5 to $20 million EBITDA range. So they've got to be big enough that we know there's a solid foundation there. And therefore, we're not taking bet the company risk, or at least we're trying not to. And then lastly is can we add value? I mean, if a company has all those great attributes, but we don't add any value, well, we shouldn't be there. But if it's a company that's in supply chain, there are a lot of areas where we can. Maybe it's a technology company, and we can bring our relationships to bear to help them scale up faster. Or maybe it's a services company, and we can use our technology capabilities to help them automate better. Or maybe it's helping them with recruiting because we have a broad network of CEOs and leaders across the supply chain. But fundamentally, we've got to be able to bring some value. And if those 5 elements are there, then we tend to be a great fit. And that's been the case for nearly all of the 9 investments that we've made in supply chain.
Very awesome advice and keys to success for everybody out there. So thank you so much for that. What would you say are 2 or 3 key pitfalls to avoid when you're seeking capital or working to sell a company, either one?
Well, a few things. I mean, first of all, when you commit to a deal process, you've got to be all in. And there are situations where we've been involved in deals where you had a management team that thought they wanted to pursue a deal or a sale in particular, and they underestimated the amount of time and work that it took. Look, if you're going to sell a business, and our core business, my core focus is Cambridge Capital, where we've invested in 9 supply chain companies. We also have an investment bank that I founded that over the last 20 years, the bank has done over 50 M&A deals. And an M&A commit deal, I mean, average, that's a 6-month process, and it could take longer depending on the nuances of the business, the market conditions, et cetera. We worked with a team, and CEO didn't really want to commit, nor did he have a CFO willing to commit the time and resources to be all in. So you'd be in a process and you'd have discussions with the buyer, and the buyer would have a list of 3 pages worth of questions. And if you don't turn those questions quickly, right, and they're working on 5 other deals, they're going to lose interest. So you've got to have, in that particular case, unfortunately, that was what happened. And the lesson was, you got to staff up your team. You can't just rely on your deal partner, but you've got to have the data room, the access, and the ability to be responsive, or else you're just going to end up. This is a competitive world, competitive market, and people will lose interest. So I think that's number 1. I think number 2 is you got to get your story right. I mean, the reality. Look, I mean, you're an expert in sales and marketing, and you run a podcast. You know how important it is to get the messaging right. You've got to script this out, and you got to make sure that your entire management team is aligned. And so that means that doing the preparation up front is vital. Writing the confidential information presentation in a manner that's clear and consistent matters, and then making sure that the management team is aligned with that. You can't have a management meeting where your VP of sales or your VP of ops saying something that is not 100% in sync with what the CEO said and what's in the in the deck. So that kind of preparation and messaging is vital. And then the last thing is you've got to know in advance what your points of negotiation are, what your bright lines are, and what you can negotiate off of and what you can't. And so, I mean, as an example, many times an entrepreneur will say, well, I'll only do this deal if I get X, in valuation. Well, sometimes that's not the only thing that matters. It's always not the only thing that matters, but sometimes other things could matter more. For example, um, you know, there have been deals that we've been a part of where a company had a choice. They could sell their business for X, call it 100 million. And then there was another deal where the total value might have been higher, might have been 120 million, but it included earnouts, escrows, and a set of other contingencies, such that, you know, in reality, the true fair value of that might be 80 million, not 120 million. Or another scenario where you get to roll equity, and that equity could be worth more over time. Or another scenario where you're not running the business anymore because you're just a division of somebody else. And if you're really passionate about the business, maybe you'd rather have a little bit less cash up front, but the opportunity to keep building and growing the business that's a source of your passion and drive. So in other words, you've just got to know up front what are the things that you care about. Now, a good deal partner, you know, whether it's your M&A advisor or otherwise, should be able to help you figure it out. But in the end, it's up to you to know that. You've just got to know what your priorities are. And if you don't know, I mean, as the saying goes, if you don't know where you're going, any road will take you there.
Absolutely. Yep. You got to know where you're going, have a vision, and know what you want. Exactly. And not what I've heard time and time again in talking with other entrepreneurs. Don't settle. If there's something that's really important, you know, don't settle. You know, keep trying, keep talking to people, keep networking to get to the deal that makes sense for both sides. It's got to be a deal that makes sense for both sides. So, what are the best ways for people to get involved with your organization or get in touch with you, Ben?
So Cambridge Capital, our private equity business, is very easy to reach. You can go to cambridgecapital.com and contact us there. You can go to me directly, ben@cambridgecapital.com, or to LinkedIn. Ben, my handle is Ben Gordon 18. But you know, I write a lot about logistics, so I'm pretty easy to find. And so if you are a part of, or an owner, investor, or know a great company in supply chain, you know, whether it's on the software side or the services side, and you're interested in thinking about, you know, taking on a partner, you know, capital, minority, majority, or otherwise, please reach out. And certainly, you know, we would welcome it. And then on the other hand, if you're looking for advice and you're thinking about selling your business, our friends at BG Strategic Advisors, the website is bgsa.com. Also, you know, certainly a great opportunity, and BGSA has worked with over 50 companies and CEOs. And then lastly, if you're interested in coming to the BGSA annual supply chain conference, which is in Palm Beach at the Breakers every January, it's an invitation-only event. It sells out the Breakers for 16 years running. It's been really the premier event for the best and brightest in supply chain. By all means, reach out. Happy to get you an invitation, and you can reach out to me directly, or you can reach out to Jennifer Alfaro, Jennifer@bgsa.com. But certainly, we're always happy to bring in new great people to be a part of the event.
Awesome. Sounds like you've got a lot going on, and much like me, multiple companies that I run and oversee, and but it's fun. It's not work for me. It's fun. Growing businesses, looking at valuations, selling, buying, getting investment, all of that's just fun stuff, I feel like. So this is the last question here I'm going to ask. I ask of all my guests. What would you say as a final word of advice for our friends out there listening or watching today?
Well, I think it all depends on your goal and you know where you are. I mean, if you're a CEO in supply chain and you're thinking about what to do next, I think the number one thing is look outside instead of inside. You know, when you think about it, we're all prisoners of habit, and you know, whether it's the sequence of activities in our day or the people that we talk to, or just, you know, what we do. But the reality is there's so much more to learn outside the four walls of your business than inside. And so, look, I think it's all about curiosity, you know, continuous, learning, studying, who the big winners are and what have they done right. I mean, we've invested in 9 great companies in supply chain, but one of the reasons why I think we've been able to find great companies and then help them is the pattern recognition from studying other great companies. I mean, 12 years ago, I met Brad Jacobs when he came to Palm Beach and then came to our annual conference, and we talked about ideas, and ultimately Brad bought what would become XPO. I was a small investor in that, and front row seat to the building of XPO, and particularly in the beginning. And if you study what great leaders do and figure out how can I apply that to my business, it can only help you. Similarly, I've had the opportunity to get to know and work with people like Sid Brown at NFI. NFI raised money from Morgan Stanley the same time I did, about 23 years ago. And Sid was smart enough to buy the division back from Morgan Stanley at a profit 2 years later. One of the few people to make money in the dot-com bust. But Sid took that business from 100 million to it's now approaching 4 billion. And you study what people like Sid have done, or Herb Sheeran building Genco, which was also around that size back then, and Herb ultimately grew it to over $1 billion before selling it to FedEx. And so studying what the masters have done is a great way to get better, get smarter, and be more successful. And that's not only true if you're a CEO or an owner, it's true for any of us. So I think, to me, it's all about studying what people who've done this before successfully have done, and see what you can learn from it.
Absolutely. Never stop learning.
Exactly.
None of us can know everything. And I've continually had to learn different things throughout my career, and it's expanded what I'm able to know and do, right? So never stop learning. I think that's awesome advice. And thanks again for coming on the show with me, Ben. I really appreciate it.
Andy, my pleasure. Great to be with you.
And that's going to do it for this episode. Thanks for watching or listening, everybody, and we'll talk to you again soon. Take care.